Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading. Thanks for tuning into our podcast, The Secret War on Cash, where we discuss some of the changing and evolving dynamics that take place in our financial markets and our economy. I have with me today my co-host, Chris Agelastos, my often, if not almost always co-host. Chris, how are you?
Great. Almost always. I like that. That'll be my
Almost
title.
always, except for when you're in Europe on holiday or stuff like that. So,
Yeah. Lavish vacations. Yeah.
yeah, with your wife, your daughters, and visiting your ancestors, which sounded fantastic. Well, anyway,
That
let's
was
get
great.
right into it. What do we want to talk about? Oh, Fort Knox. Yes,
It's always fun.
we mentioned this. Like I can't remember. It wasn't that many podcasts ago. Maybe a couple, three podcasts. And when Musk, Trump, Doge, when all that was going active, I think I can't speak for everyone, but myself, like everyone was kind of excited. I was kind of excited because we were going to finally see an audit of Fort Knox.
Yeah.
And, it looked like, okay, this is happening. This is going to happen. Just like, why wouldn't it? Even before Trump took office, he started talking about all the tariffs and what was going to happen there. And lo and behold, yeah, that happened. So when they started talking about the audit of Fort Knox, I'm like, okay, this is it. This is happening. And then the whole story went flat. It just absolutely disappeared. You didn't. It was all over the news, like the main story, and then it went flat. So we talked about that a few weeks ago. Now we might have a little bit of an answer. This is from James Rickards. The truth about Fort Knox and gold leasing. So, Chris, I'm going to let you run with this and tell us what exactly happened.
Yeah.
What's this leasing all about and what happened? Because I do talk in here about why the story went dead. So lay it on
Yeah.
us.
Yeah. So Jim Rickards, and this is his opinion. He does believe that the metal is there. Um, but he brings up a couple of good points here. He's not sure which may be the case, but number one, the Federal Reserve and the U.S. government really never wants to call attention to gold's role as a monetary asset. The government controls the printing presses. They want us to think of money as the U.S. dollar that they create, not the gold that may be sitting in Fort Knox. And he makes a great point. We don't really talk about it in school or economics classes. For people that are probably under 40 years old, they probably don't necessarily know that gold was ever even really money here in the United States. Obviously some of them do, but it's just not commonly talked about, and they never experienced it. Kind of to some extent, my own kids hardly had to deal with cash for the most part. For over half their life now. Everything's been electronic payments with their iPhones or a debit card or something like that. So,
Sure.
so that's his first argument, is that, look, if you want to maintain your monopoly on the dollar and the printing presses, it's best to just ignore gold and not draw any extra attention to it. So that's makes sense, right? I mean,
It's
that's
viable.
likely.
It's
Yeah.
viable, sure.
But the leasing thing is interesting, because I've heard about it, but I've never really delved into it much before, and it does make perfect sense also that gold's sitting there. While it is a safety mechanism and maybe backs up our dollar to some extent, it doesn't really do much else, right? And like anyone, if you own some property and you're not using it a lot, if you have a second home that you inherited or purchased as an investment property and it's not doing much for you, you might lease it out. You might let someone else use it while you're not, and try to at least generate some income, some additional benefit from it. And he points out here that you can lease this gold for about 2% or so a year in annual lease payments. So if you have trillions of dollars in gold sitting there, and you can lease it out for a couple of percent, that's pretty good. Well, what's interesting though is that the person you lease it to can then also lease it to someone else and charge a fee, and then lease it to someone else and charge a fee, and to the tune of about 100 to 1. And so he points out here that 1 metric ton of gold could support 100 metric tons of paper gold. And what is paper gold? Gold futures, gold options, gold swaps, ETFs. We hear a lot about gold ETFs in our industry. Paper gold. And if people really understood, I think the average investor that's purchasing some of these gold ETFs, if they really understood that the gold that they're investing in isn't really owned by the ETF that they're investing in, and if that ETF is leasing it from someone else, who's leasing it from someone else, then if the carousel stops, right, if the music stops, and you're playing musical chairs, you may be left without a seat, and that's probably the most likely explanation here as to why they don't want to really put any more attention on the gold in there, because it's just like a bank run. If the banking system works because you and I don't go to the bank on the same day along with all the other depositors and request our money back. If a bunch of people start going to the bank, even 5% of the depositors, 6%, and request all of their money, all of a sudden the bank is out of money because they lent it to someone else. It didn't just sit there. And it's the same thing with the gold and these ETFs, and his prediction that that's what the U.S. government is doing with our gold here, is leasing it to others.
Well, much like you said, same with me. I'm familiar with the notion or concept of leasing. This article actually did a pretty good job, though, of giving some clarification, if you will.
Yeah.
And as I read it and started reading how they were describing how this leasing works, for me anyways, it literally started to sound almost like a derivative, because there's really no limit to the extent that you can continue just rolling these leases. And one of my questions would be, like, who in the world is keeping track of this? Because it's, like it said in there, it's unlimited the number of people they can resell that lease to. And who in the world is keeping track of that? Because if you're doing a new lease, let's say, like you said, it's a metric ton, how many metric tons of gold are being created out of there off of the initial metric ton of gold? And then the other thing he didn't get into as much in here, which I was a little surprised, but my understanding is the valuation of the gold per ounce in Fort Knox, I think, is at $35 an ounce, like way back when. And that didn't get brought up either, the valuation there, because that's the other thing. Like, you look at all these leases, that price point, depending on how many of those lease contracts are out there, could be, all over the board, if you will. So there were a lot of, I understand what he was saying, but there were a lot of questions I had after reading this. But I will say, and for those of you tuning in, if you click on the article, the best thing that Rickards says in the whole thing, and I'm a little biased here, but it is the God honest truth, and we'll get into that here in our next article. He said, what should we be doing because of what's going on here with Fort Knox and his leasing? He said, for the rest of us, the solution to this problem is simple: buy gold. And that's what people should be doing. And to buy gold, you can do that and learn more about it by calling us at Swiss America at 1-800-289-2646. Or you can actually text us that same number, 1-800-289-2646, or visit us online at www.swissamerica.com. You'll see the number and the link there for the website in the description here of the podcast. But let's get into gold here, Chris. Look at this next article. Why should people buy gold? Rickards just told us to buy gold. It wasn't even me, it was Rickards. Yep. And here's a good reason. Gold is sitting in the roughly $3,300 an ounce range right now. Gold could hit $4,000 as U.S. dollar weakens, experts warn. Not experts. Many experts are saying. And here's the deal. They're all talking about what the U.S. dollar weakening. That's not a tough sell right now. The U.S. dollar has been weakening. It's going to continue to weaken for a lot of reasons, not just due to what's happening maybe domestically with our markets, economy, and everything else, but what's happening around the world where this de-dollarization is taking place. So this $4,000 per ounce gold price, Chris, this is very attainable. Wouldn't you agree?
Yeah. Oh yeah, and we talked about this when gold was predicted to cross 3,000 and then 3,500, and lo and behold, now it's 4,000. They always only predict like a few $100 increase. They don't want to say what it could likely do in the next several years, which could be what, $7, $8, $10,000 an ounce. Rickards in his previous article even said it could be 25,000 an ounce if people really understood
Especially if you look
how
at
much
like
of this gold was leasing.
cryptos like Bitcoin, what's to stop gold from doing the same? Sorry to interrupt you, but
Right.
yeah, it's very
No.
believable.
Yeah, and these are not, this is not some kook on the other end of a computer putting these numbers out there. I mean, in this article alone, they mentioned State Street Advisors, Morgan Stanley, UBS. I mean, these are big names, and they're saying here, look, dollar weakness, like you touched on, de-dollarization trend. We know the dollar is in trouble. Sustained central bank buying. Gold demand is being pushed up there. Morgan Stanley says these are ideal conditions for gold's advance. UBS points out our ballooning debt situation, causing investors to lose even more faith in the currency. You have major stock market fluctuations and foreigners and institutions looking to maybe scale back and pull some of their money out of the U.S. So all of these things help create that environment where we should continue to see gold prices continue to rise, and it sounds like rise quickly as they have the last year and a half or so.
Right, right. Well, and look, for those tuning in again, buy gold and buy it now. I was sitting here as you're talking, Chris, thinking about, look at Bitcoin. I mean, Bitcoin, it wasn't too terribly long ago. It was $30,000 per Bitcoin. Now it's
Right.
and it happened very quickly. And again, there's nothing stopping that. And there's been already, we covered even a year ago, some of the people who are predicting, because of gold's tied to the dollar, the debt, and what have you, meaning as a hedge investment, like when they just even applied the debt problem to the price of gold, they're talking in $30,000 and $40,000 an ounce gold, maybe plus. So anyway, thanks for tuning in. For those of you who are doing so, and if you're not subscribed to the podcast, please do so as well, so we can bring you more information like this in the future. Chris, thanks for sharing all that. I know that this is a topic that is not going away and will be. Fort Knox may. Unfortunately, that story, this might be the end of it. But
maybe till the next election.
I'll tell you, if something does come up, I'm going to be looking for it, because I'm still holding out hope that somehow, some way, we're going to get in there someday. I don't even understand why we wouldn't, other than the fact, like you said, that they're trying to keep it hush hush. All right. Well, thanks for tuning in. Have a great rest of your day, and we'll see you real soon.